Tantor Audio, a division of Recorded Books, presents Investing for Dummies, 9th edition, by Eric Tyson, MBA, narrated by Peter Lerman. Publisher's note: this audiobook refers to figures and tables included in the print and e-book editions of the book. Introduction. With each new edition of this investing guide, I find that the core investment philosophy I discuss within it has stood the tests of time and changing market forces. During the financial crisis of 2008, things got scary. Large Wall Street firms were going under, stock prices were plummeting, and layoffs and unemployment rates were soaring. And all this was happening in the midst of the 2008 presidential election. Talk of another Great Depression was in the air. In fact, polls showed a majority of Americans feared that another depression was actually happening. Housing prices were dropping sharply in most communities, and more properties were ending up in foreclosure. Investing didn't seem so fun anymore. However, even though the downturn was the worst in decades, it had similarities to prior downturns. And people who kept their sense of perspective and followed my advice have enjoyed tremendous returns since the market bottom. Now, fast forward to 2020. The United States was enjoying one of the longest continuous periods of economic expansion, and the unemployment rate had sunk to a 50-year low. Stock prices continued to rise to new highs despite periodic setbacks. And then the coronavirus upset the good times and quickly reminded us that investing involves risks and sharp price declines, often when least expected. I know from working with people of modest and immodest economic means that they increase their wealth by doing the following: living within their means and systematically saving and investing money, ideally in a tax-favored manner. Buying and holding a globally diversified portfolio of stocks, building their own small business, investing in real estate. This book explains each of these wealth boosters in detail. Equally, if not more important, however, is the information I provide to help you understand and choose investments compatible with your personal and financial goals. About this book. The best investment vehicles for building wealth, stocks, real estate, and small business, haven't changed, but you still need money to play in the investment world. Like the first edition of Investing for Dummies, the 9th edition of this national bestseller includes complete coverage of these wealth-building investments, as well as other common investments, such as bonds. Here are the biggest changes in this edition. I've updated the data and examples in this book to provide you the latest insights and analyses. Having trouble comprehending whether the Federal Reserve's interest rate policy will impact the stock market? Curious about how tax law changes may impact your investment strategies? Worried what impact the election will have on the economy and financial markets? Confused with the increasing array of retirement account savings options, such as individual 401ks and Roth 401ks. Seeking a way to invest in stocks without exposing yourself to the tremendous risks experienced during the 2008 financial crisis or the 2020 coronavirus downturn. Curious about what an exchange-traded fund, ETF, or hedge fund is and whether you should invest in one. Wondering why people are talking about cryptocurrencies like Bitcoin and whether you should consider them. Contemplating using an online broker that is advertising free trading. Weighing whether and where to invest in real estate given current market conditions. Wondering what the best ways are to invest globally. Having trouble making sense of various economic indicators and what they mean to your investment strategy. You can find the answers to these questions and many more in this edition. I offer more information on investing resources. With the tremendous growth in websites, software, apps, publications, media outlets, and other sources of investing advice and information, you're probably overwhelmed in choosing among the numerous investing research tools and resources. Equally problematic is figuring out who you can trust and who you need to ignore. So many pundits and prognosticators claim excellent track records for their past predictions. But who really can you believe? I explain how to evaluate the quality of current investment tools and resources, and I provide tips on deciding who to listen to and who to tune out. To build wealth, you don't need a fancy college or graduate school degree, and you don't need a rich dad or mom, biological or adopted. What you do need is a desire to read and practice the many simple yet powerful lessons and strategies in this book. Seriously, investing intelligently isn't rocket science. By all means, if you're dealing with a complicated, atypical issue, get quality professional help. But educate yourself first. Hiring someone can be risky if you're financially challenged. If you do decide to hire someone, you'll be much better prepared if you educate yourself. Doing so can also help you focus your questions and assess that person's competence. Foolish assumptions. Every book is written with a certain reader in mind, and this book is no different. Here are some assumptions I made about you. You may have some investments, but you're looking to develop a full-scale investment plan. You'd like to strengthen your portfolio. You want to evaluate your investment advisor's or broker's advice. You have a company-sponsored investment plan, like a 401k, and you're looking to make some decisions or roll it over into a new plan. If one or more of these descriptions sound familiar, you've come to the right place. Icons used in this book. Throughout this book, icons help guide you through the maze of suggestions, solutions, and cautions. I hope the following images make your journey through investment strategies smoother. Eric's Picks. If you see this icon, I'm pointing out companies, products, services, and resources that have proved to be exceptional over the years. These are resources that I would or do use personally or would recommend to my family and friends. Investigate. I use this icon to highlight an issue that requires more detective work on your part. Don't worry, though, I prepare you for your work so you don't have to start out as a novice gumshoe. Remember, I think the name says it all, but this icon indicates something really, really important. Don't you forget it. Technical stuff. Skip it or read it. The choice is yours. You'll fill your head with more stuff that may prove valuable as you expand your investing know-how, but you risk overdosing on stuff that you may not need right away. Tip. This icon denotes strategies that can enable you to build wealth faster and leap over tall obstacles in a single bound. Warning. This icon indicates treacherous territory that has made mincemeat out of lesser mortals who have come before you. Skip this point at your own peril. Beyond the book. In addition to the material in the print or ebook you're reading right now, this product comes with a free Access Anywhere cheat sheet that can set you on the path to successful investing. To get this cheat sheet, simply go to Dummies.com and search for Investing for Dummies cheat sheet in the search box. Where to go from here? If you have the time and desire, I encourage you to read this book in its entirety. It provides you with a detailed picture of how to maximize your returns while minimizing your risks through wealth-building investments. But you don't have to read this book cover to cover. If you have a specific question or two that you want to focus on today, or if you want to find some additional information tomorrow, that's not a problem. Investing for Dummies, 9th edition, makes it easy to find answers to specific questions. Just turn to the table of contents or the index to locate the information you need. You can get in and get out just like that. Part 1. Getting Started with Investing. In this part, get familiar with the different types of investments you have to choose from, including stocks, bonds, real estate, small business, and funds. Deepen your understanding of risks and returns so you can make informed investing decisions and react to changes in the market. Make wise investing decisions that fit with your overall financial situation and goals. Chapter 1. Exploring your investment choices. In this chapter, defining investing, seeing how stocks, real estate, and small business ownership build long-term wealth, understanding the role of lending and other investments, knowing where not to invest your money. In many parts of the world, life's basic necessities, food, clothing, shelter, health care, and taxes, consume the entirety of people's meager earnings. Although some Americans do truly struggle for basic necessities, the bigger problem for other Americans is that they consider just about everything, eating out, driving new cars, hopping on airplanes for vacation, to be a necessity. I've taken it upon myself, using this book as my tool, to help you recognize that investing, that is, putting your money to work for you, is a necessity. If you want to accomplish important personal and financial goals, such as owning a home, starting your own business, helping your kids through college, and spending more time with them when they're young, retiring comfortably, and so on, you must know how to invest well. It's been said, and too often quoted, that the only certainties in life are death and taxes. To these two certainties I add one more: being confused by and ignorant about investing. Because investing is a confounding activity, you may be tempted to look with envious eyes at those people in the world who appear to be savvy with money and investing. Remember that everyone starts with the same level of financial knowledge. None. No one was born knowing all this stuff. The only difference between those who know and those who don't is that those who know have either devoted their time and energy to acquiring useful knowledge about the investment world, or have had their parents instill a good base of investing knowledge. Getting started with investing. Before I discuss the major investing alternatives in the rest of this chapter, I want to start with something that's quite basic yet important. What exactly do I mean when I say investing? Simply stated, investing means you have money put away for future use. You can choose from tens of thousands of stocks, bonds, mutual funds, exchange-traded funds, and other investments. Unfortunately for the novice, and even for the experts who are honest with you, knowing the name of the investment is just the tip of the iceberg. Underneath each of these investments lurks a veritable mountain of details. Remember, if you wanted to and had the ability to quit your day job, you could make a full-time endeavor out of analyzing economic trends and financial statements and talking to business employees, customers, suppliers, and so on. However, I don't want to scare you away from investing just because some people do it on a full-time basis. Making wise investments need not take a lot of your time. If you know where to get high-quality information and you purchase well-managed investments, you can leave the investment management to the best experts. Then you can do the work that you're best at and have more free time for the things you really enjoy doing. An important part of making wise investments is knowing when you have enough information to do things well on your own versus when you should hire others. For example, foreign stock markets are generally more difficult to research and understand than domestic markets. Thus, when investing overseas, hiring a good money manager, such as through a mutual or exchange-traded fund, makes more sense than going to all the time, trouble, and expense of picking individual international stocks. I'm here to give you the information you need to make your way through the complex investment world. In the rest of this chapter, I clear a path so that you can identify the major investments and understand the strengths and weaknesses of each. Building Wealth with Ownership Investments. Eric's Picks. If you want your money to grow faster than the rate of inflation over the long term, and you don't mind a bit of a roller coaster ride from time to time in your investment's values, ownership investments are for you. Ownership investments are those investments where you own an interest in some company or other asset, such as stock, real estate, or a small business, that has the ability to generate revenue and profits. Observing how the world's richest have built their wealth is enlightening. Not surprisingly, many of the champions of wealth around the globe gained their fortunes largely through owning a piece, or all, of a successful company that they or others built. In addition to owning their own businesses, many well-to-do people have built their nest eggs by investing in real estate and the stock market. With softening housing prices in many regions in the late 2000s, some folks newer to the real estate world incorrectly believe that real estate is a loser, not a long-term winner. Likewise, the stock market goes through down periods but does well over the long term. See Chapter 2 for the scoop on investment risks and returns. And of course, some people come into wealth through an inheritance. Even if your parents are among the rare wealthy ones and you expect them to pass on big bucks to you, you need to know how to invest that money intelligently. Remember, if you understand and are comfortable with the risks and take sensible steps to diversify, you don't put all your investment eggs in the same basket. Ownership investments are the key to building wealth. For most folks to accomplish typical longer-term financial goals, such as retiring, the money that they save and invest needs to grow at a healthy clip. If you dump all your money in bank accounts that pay little, if any, interest, you're more likely to fall short of your goals. Not everyone needs to make his money grow, of course. Suppose that you inherit a significant sum and/or maintain a restrained standard of living and work well into your old age simply because you enjoy doing so. In this situation, you may not need to take the risks involved with a potentially faster-growing investment. You may be more comfortable with safer investments, such as paying off your mortgage faster than necessary. Chapter 3 helps you think through such issues. Entering the stock market. Stocks, which are shares of ownership in a company, are an example of an ownership investment. If you want to share in the growth and profits of companies like Skechers, footwear, you can. You simply buy shares of their stock through a brokerage firm. However, even if Skechers makes money in the future, you can't guarantee that the value of its stock will increase. Some companies today sell their stock directly to investors, allowing you to bypass brokers. You can also invest in stocks via a stock mutual fund or an exchange-traded fund, where a fund manager decides which individual stocks to include in the fund. I discuss the various methods for buying stock in Chapter 6. Remember, you don't need an MBA or a PhD to make money in the stock market. If you can practice some simple lessons, such as making regular and systematic investments and investing in proven companies and funds, while minimizing your investment expenses and taxes, you should make decent returns in the long term. However, I don't think you should expect that you can beat the markets, and you certainly are not likely to beat the best professional money managers at their own full-time game. This book shows you time-proven, non-gimmicky methods to make your money grow in the stock market as well as in other financial markets. I explain more about stocks and mutual funds in Part 2. Owning real estate. People of varying economic means build wealth by investing in real estate. Owning and managing real estate is like running a small business. You need to satisfy customers, tenants, manage your costs, keep an eye on the competition, and so on. Some methods of real estate investing require more time than others, but many are proven ways to build wealth. John, who works for a city government, and his wife Linda, a computer analyst, have built several $1 million in investment real estate equity, the difference between the property's market value and the debts owed, over the decades. Our parents owned rental property, and we could see what it could do for you by providing income and building wealth, says John. Investing in real estate also appealed to John and Linda because they didn't know anything about the stock market, so they wanted to stay away from it. The idea of leverage, making money with borrowed money, on real estate also appealed to them. John and Linda bought their first property, a duplex, when their combined income was just $35,000 per year. Every time they moved to a new home, they kept the prior one and converted it to a rental. Now in their 50s, John and Linda own 7 pieces of investment real estate and are multi-millionaires. It's like a second retirement, having thousands in monthly income from the real estate, says John. John readily admits that rental real estate has its hassles. We haven't enjoyed getting some calls in the middle of the night, but now we have a property manager who can help with this when we're not available. It's also sometimes a pain finding new tenants, he says. Overall, John and Linda figure that they've been well rewarded for the time they spent and the money they invested. The income from John and Linda's rental properties also allows them to live in a nicer home. Tip: ultimately, to make your money grow much faster than inflation and taxes, you must take some risk. Any investment that has real growth potential also has shrinkage potential. You may not want to take the risk or may not have the stomach for it. In that case, don't despair. I discuss lower risk investments in this book as well. You can find out about risks and returns in Chapter 2. Running a small business. I know people who have hit investing home runs by owning or buying businesses. Unlike the part-time nature of investing in the stock market, most people work full-time at running their businesses, increasing their chances of doing something big financially with them. Who wants to invest like a millionaire? Having $1 million isn't nearly as rare as it used to be. In fact, according to the Spectrum Group, a firm that conducts research on wealth, more than 11 million U.S. households now have at least $1 million in wealth, excluding the value of their primary home. More than 1.5 million households have $5 million or more in wealth. Interestingly, households with wealth of at least $1 million rarely let financial advisors direct their investments. Only 1 of 10 such households allows advisors to call the shots and make the moves, whereas 30% don't use any advisors at all. The remaining 60% consult an advisor on an as-needed basis and then make their own moves. As in past surveys, recent wealth surveys show that affluent investors achieved and built on their wealth with ownership investments, such as their own small businesses, real estate, and stocks. Remember, if you try to invest in individual stocks, by contrast, you're likely to work at it part-time, competing against professionals who invest practically around the clock. Even if you devote almost all your time to managing your stock portfolio, you're still a passive bystander in businesses run by others. When you invest in your own small business, you're the boss, for better or worse. For example, a decade ago, Calvin set out to develop a corporate publishing firm. Because he took the risk of starting his business and has been successful in slowly building it, today, in his 50s, he enjoys a net worth of more than $10 million and can retire if he wants. Even more important to many business owners, and the reason that financially successful entrepreneurs such as Calvin don't call it quits after they've amassed a lot of cash, are the non-financial rewards of investing, including the challenge and fulfillment of operating a successful business. Similarly, Sandra has worked on her own as an interior designer for more than 2 decades. She previously worked in fashion as a model, and then she worked as a retail store manager. Her first taste of interior design was redesigning rooms at a condominium project. I knew when I did that first building and turned it into something wonderful and profitable that I loved doing this kind of work, says Sandra. Today, Sandra's firm specializes in the restoration of landmark hotels, and her work has been written up in numerous magazines. The money is not of primary importance to me, she says. My work is driven by a passion, but obviously it has to be profitable. Sandra has also experienced the fun and enjoyment of designing hotels in many parts of the United States and overseas. Most small business owners, myself included, know that the entrepreneurial life isn't a smooth walk through the rose garden. It has its share of thorns. Emotionally and financially, entrepreneurship is sometimes a roller coaster. In addition to receiving financial rewards, however, a small business owner can enjoy seeing the impact of their work and knowing that it makes a difference. Combined, Calvin's and Sandra's firms created dozens of new jobs. Tip: not everyone needs to be sparked by the desire to start her own company to profit from small business. You can share in the economic rewards of the entrepreneurial world through buying an existing business or investing in someone else's budding enterprise. I talk more about evaluating and buying a business in Part 4. Generating income from lending investments. Besides ownership investments, which I discuss in the earlier section, Building Wealth with Ownership Investments, the other major types of investments include those in which you lend your money. Suppose that, like most people, you keep some money in a bank, either locally or online, most likely in a checking account, but perhaps also in a savings account or certificate of deposit, CD. No matter what type of bank account you place your money in, you're lending your money to the bank. Technical stuff. How long and under what conditions you lend money to your bank depends on the specific bank and the account that you use. With a CD, you commit to lend your money to the bank for a specific length of time, perhaps 6 months or even 1 or more years. In return, the bank probably pays you a higher rate of interest than if you put your money in a bank account offering you immediate access to the money. You may demand termination of the CD early. However, you'll usually be penalized. As I discuss in more detail in Chapter 7, you can also invest your money in bonds, another type of lending investment. When you purchase a bond that's been issued by the government or a company, you agree to lend your money for a predetermined period of time and receive a particular rate of interest. A bond may pay you 4% interest over the next 10 years, for example. An investor's return from lending investments is typically limited to the original investment plus interest payments. If you lend your money to Netflix through one of its bonds that matures in, say, 10 years, and Netflix triples in size over the next decade, you won't share in its growth. Netflix stockholders and employees reap the rewards of the company's success, but as a bondholder, you don't. You simply get interest and the face value of the bond back at maturity. Remember, Many people keep too much of their money in lending investments, thus allowing others to reap the
Sample complete. Ready to continue?